In the international asset protection space, Dubai foundations are now widely discussed for wealth planning, succession, and risk control. Because they come up so often, many people assume that a DIFC foundation works in every situation. Well, that assumption is where the problem starts. In reality, some individuals, families, or businesses do not benefit from the DIFC foundation at all. In the wrong setup, it can add cost, increase complexity, and create friction instead of solving a real problem. Understanding when a foundation does not fit your situation is just as important as knowing when it does. And that is what we are going to discuss in this video today. Now, before we start, if you would like us to help with your asset protection and succession planning, you can request a free and customized asset protection plan by clicking the link in the description below that you can then implement step by step on your own timeline. One reason DIFC foundations attract attention is that Dubai's image as stable and well-regulated place. Dubai is seen as tax efficient, structured, and internationally recognized. For business owners, global families, and professionals, a foundation can offer control and long-term planning. But this does not mean it works for everyone. There are clear situations where using a DIFC foundation is not the right decision. And a good place to start is the cost and scale. Setting up and running a foundation in Dubai is not cheap. For high net worth families with complex structure, the cost is often negligible. But if your total assets are limited, the foundation may not be the suitable structure. If your wealth is mainly a personal home, a small business, or one investment property, the yearly cost can be higher than the benefits. A DIFC foundation also comes with annual maintenance obligations. This includes the registered agent fee, the office space, annual renewals, and compliances. If your assets are not large or complex, this structure may be too heavy for your needs. Banking is another point where expectations must be realistic. A DIFC foundation is a legal and recognized structure, but banks are cautious. Opening a bank account for a foundation in Dubai can take time, and it usually requires more explanation than a standard company account. Banks want to understand why the foundation exists, what assets it will hold, and how the funds will be moved in and out. They will review the source of funds carefully and expect clear documentation that shows substance and long-term intent. If the foundation has no clear activity or economic purpose, banks may delay the process or decline the account altogether. Succession planning is often presented as a major advantage of Dubai's foundations. This is true in many cases, but not all. If you live in a country with strong inheritance laws, a foreign foundation can create legal tension. Some countries have forced heirship rules, which limits how assets can be passed on. In this situation, assets placed into a DIFC foundation may still be challenged. Your beneficiaries may face legal delays, tax exposure, or disputes. And in this situation, we usually recommend adding additional layers to protect your beneficiaries from the inheritance laws in your home country. It is important to review how your home country treats foreign foundations before taking this step. Tax reporting is another key point. A DIFC foundation does not automatically reduce taxes. In many countries, tax authorities closely monitor offshore structures. If you are tax resident in places such as Australia, the UK, or the United States, you may need to report the foundation and its income or comply with local tax laws. There may not be the ideal outcome for your case. So it's always advisable to get local tax advice before taking this step. A DIFC foundation is also not suitable if you run an active business. Foundations are meant to hold assets, not operate companies. They're not designed to issue invoices, employ staff, or sign day-to-day commercial contracts. If you need operational activity, a free zone company or a holding company is much better option. The foundation can definitely sit above these entities, but it should not replace them as an operating entity. Family structure and relationships also matter. Foundations work best when family roles and beneficiaries are clear. If there are disputes, uncertainty, or frequent changes, a foundation can become difficult to manage. Changing beneficiaries and rules later on can be costly and slow to adapt. Now, some assets are also not suitable for holding inside a foundation. Certain countries restrict property ownership by foreign entities. Some regulated businesses do not allow shares to be held by foundations. Intellectual property and licenses may need special approval before transfer. These issues do not mean a foundation is impossible, but they do add complexity. Assets eligibility should always be checked in advance. Time horizon is another important factor. DIFC foundations are designed for long-term planning. They're not ideal for short-term holding or quick sales. If you plan to sell assets soon or move countries in the near future, setting up a foundation may not be worth the effort. Simpler structures such as a special purpose vehicle or SPV often works better for short-term goals. Finally, a DIFC foundation is not suitable if your aim is secrecy. Dubai does not support hidden ownership or secret structures. Foundation must follow strict KYC or Know Your Client and AML, that is anti-money laundering rules. And beneficial owners must be disclosed to the regulators when required. Now, don't get me wrong, DIFC foundations do offer a high level of privacy. There is no public register showing founders, assets, or council members. This information is not visible to the public or third parties. But privacy is not the same as secrecy. This does not mean that it is hidden from regulators or relevant government departments, whether in Dubai or in your home country. If someone is looking to avoid transparency altogether, DIFC Foundation is wrong choice and create serious legal problems. A DIFC foundation is a strong tool when used in the right situation, but it is not suitable for everyone. If your assets are small, your structure is simple, or your goals are short-term, other options may be better. Carefully planning is always more important than choosing a popular structure. So if you want to understand whether a DIFC foundation fits your situation, you can request your free and customized asset protection plan using the link in the description below. That's it for today, and I'll see you in the next video.